we get a month close over 50, we are into a new ball game, a new paradigm. And people that own it, that are long-term strong hands, probably aren't going to sell it. Now they
Yeah.
might lighten up some. I don't know. I don't know people's thinking, but what I do know is that once that occurs, and I believe it will, then what happens? Well, the holders, the strong hands, will hold because they think, "Wow, how high is it going to go? It's going to get 100." That's what they believe, or 75, or whatever they believe. And that means there's not a lot in the float. The strong hands are holding hard, holding strong. So new buyers, like the industrial side, that has to have it to maintain production of whatever they're making, solar panels, or silver shot, or silver liquids, or silver mesh, or whatever it is. They've got to buy it or they're out of business. The two cases are technical and fundamental. Fundamentally, I think anyone that's watched your show for more than 3 or 4 times, or anything in this space of us metalheads, knows, we have a very big problem on a global basis, and that's based on this exceedingly growing debt worldwide, and it can't be paid off. So that fundamental just continues. But on a technical side, I mean, silver has not seen a 40 handle for quite some time. And this is new territory, more or less, for silver. And there's a nice base below it. In other words, it didn't just get there in a parabolic move where it just kept going up and up and up and up, and all of a sudden we hit past 40. It's stair-stepped up. So we've seen it, get through that 35, 35.50. I mean, people have different ideas of where the exact resistance line is, but it broke through that. And instead of going right to 40, it built a base at a higher level, and now it's moved up. So we're sitting in a position now where silver, from what I call the Morgan rule, is confirmed. We have an 80%, not 100%, an 80% probability this is a breakout, not a fakeout. Gold actually needs to go one more day above its all-time high, its recent all-time high, which I think is like 35.07. Don't quote me, but somewhere in that range. It's above that yesterday and today, and then it should, if it does tomorrow, get those 3 days in a row, which would again give us about an 80% probability that too is a breakout. So it's, I think, a little interesting that silver actually led the breakout the way I measure them. Doesn't mean I don't agree with David, don't agree with me. I'm just telling you how I do it. But the breakout here in silver is prior to breakout in gold, again, the way I analyze it. And that kind of reconfirms to me that silver is going to start catching up to gold. We do see the gold-silver ratio getting to be a lower and lower number, meaning that silver is outperforming gold, but it's still very high relative to historical standards. So I'm still quite bullish on both the metals, but I do expect silver to continue to have a narrowing gold-silver ratio over time. And we may get to what we've already seen in this bull market, which is 30-1. Right now we're above 80. So that implies that from here on out, and I say implies, no guarantees, that silver should do at least twice as well as gold on a percentage basis. Time will tell, but it's hard not to be excited, but I want to stay grounded and not get too overly excited. And the last thing you didn't ask but pertains, and that's the mining shares. And we've seen, new all-time highs in some of our majors, and we've seen some of the juniors really start to perform. The indexes, XAU, HUI, are doing well, and really we've got confirmation after confirmation after confirmation. This is the real deal, and we've got more to go.
Technically, silver has entered new territory. After years of struggling below key resistance levels, it has now stair-stepped higher, consolidating at stronger bases rather than spiking parabolically. This structured move suggests stability and conviction behind the buying. Analysts estimate there is now an 80% chance that silver's rally marks a true breakout. Unlike gold, which still awaits confirmation, silver has already led the way. This signals not only investor confidence, but also a potential rebalancing in the gold-silver relationship, a ratio that historically narrows when silver begins to outperform.
First of all, technical work is based on chart patterns. Really, the most important things are momentum, which very people don't even know how to calculate that, and time. And so, show me that curve and not telling me if it was soybean oil, silver, or a stock. I would say, yeah, it needs some consolidation. And uh, and does that mean it needs it, next week or next month? And the answer is no, I don't know, but I do know it needs some. Having said that, it's only a precursor to the overall maximum shift in ideology, which means going from basically trusting paper assets, which the safest asset is the United States Treasuries, T bills, T bonds, T notes. Well, that's a false statement on surface. We all know the debt can't be paid back. So why would you buy, a business and the owner has a debt and you buy his business knowing that when you take over the business, you never have a chance to ever pay back what's owed, let alone make a profit? I mean, it's ridiculous. Of course, in the bond market, you can make a profit playing the game of our interest rates going higher or lower, and then the bond price changes and you sell or buy the bond based on your bet. But that's even coming to, not to an end, but it's subsiding. So the shift is monumental. It's from things that I used to trust that I don't trust as much anymore. I don't say I don't trust it. I don't think it should be in bonds at all. That's my personal strong opinion. But moving out of bonds and moving into what you can trust, what have you trusted for 5,000 years before there's even been a bond market? Well, it's called gold.
Gold recently tested its all-time highs, awaiting one more confirmation for a confirmed breakout. Silver, however, has already surged, hinting that it could narrow the gold-silver ratio significantly. Currently, the ratio remains above 80, well above historical norms. In previous bull markets, silver has outperformed gold by 2 to 1 once momentum shifted. If history rhymes, silver could again be entering a period where gains outpace gold, driving both investor and industrial demand. The market appears to be preparing for this transition, with many analysts pointing to the $50 mark as a psychological and structural battleground.
So you're seeing a shift by central banks moving out of the sacrosanct at one time U.S. debt into gold. And that started a couple of years ago. And I kept saying the run to gold has begun. You can go back and verify that if you wish. And I'm not trying to pat myself on the back, just that, I've analyzed these markets for a long time. And sometimes people don't see the obvious. To me, it was quite obvious. And I kept pointing it out. But now it's going beyond the central banks. It's moving into larger money, hedge funds, family offices, pension funds even, saying, hey, wait a minute, our treasury is the most, the grounding force in my portfolio. And the answer is maybe not as much. Maybe we should hedge. Maybe we should buy some gold. So I think the trend, again, for this last phase has started and will continue. And as more and more of that shift goes from people where 1% say I'm shifting, 2% to 3% to 5% perhaps, saying, I've got to either hedge or I've got to lighten up my load on U.S. debt and move into gold and or silver, or gold and silver, or gold and platinum, or whatever, and perhaps the underlying ETFs, and even perhaps the underlying mining shares, because there's several ways to get exposure. That shift is just starting. You're just seeing it. It's like the marathon has just started, and 1 mile out of the whatever it is, 28 is there. 2 miles have gone by. It's the banks only. Now we're moving to mile 3 to 4, and we're starting to see other participants.
Mining companies, often the leverage play on metals, are showing powerful signals. Majors are hitting new highs, while junior miners are beginning to attract capital inflows. Indexes like the XAU and HUI confirm this momentum. Technical charts reveal that consolidation is necessary, but the trend points upward. More importantly, momentum indicators suggest this move is grounded in strong demand rather than speculative frenzy. If mining shares continue this trajectory, they may foreshadow higher metal prices ahead. This alignment between physical markets and mining equities often marks the early stages of a sustained bull market cycle.
First of all, I've seen it. We've seen some, I've gotten some calls, and not many, but some on those type of entities, family offices, or I'd say not big hedge funds. I mean, those guys don't talk to me, but some smaller ones. And I think now that it's a critical mineral from the USGS, that gives impetus to the validity of silver. And then, of course, who's ahead of the pack? Well, Russia bought silver, whether it was for strategic reserves or for monetary purposes, really is immaterial. It was a purchase of silver for whatever purpose. And so they've kind of spearheaded it along with the Saudis, as you said. So, yeah, we're starting to see it trickle in. What'll be interesting is it's such a small market, you don't need much more buying power to see it really move. And I just finished an article I'll be posting later today, probably on my Substack, on silver as a once upon a time strategic metal. I've gotten into conversations with some of the others in the field. I won't name them, but the United States actually started what's called the Silver Eagle program. The official title was Silver Liberty, but I'm a stickler for fact. But regardless, it was from the strategic stockpile, the defense holding of silver. And at that time, some of the senators thought, well, this silver is just lying around. We can get as much as we want, and who cares? Let's lower the debt. Let's get rid of some of this debt. Let's sell silver in the market. They came up with an act in 1985, started minting in 1986. And they were so short-sighted that the initial legislation said they could only use silver from the stockpile or domestically produced sources.
For decades, government bonds were considered the safest store of value. But with U.S. debt ballooning and real yields turning questionable, trust is eroding. Central banks have already begun diversifying into gold, signaling a structural shift away from paper promises. Now hedge funds, pension funds, and even family offices are following. The allocation may start small, 1% or 2% of portfolios, but the collective impact is massive in such a small market. This quiet but powerful reallocation is only in its early stages. If it accelerates, the flow of capital into metals and mining could transform the landscape dramatically.
Well, there's so little silver mining in the United States for decades that all of a sudden they had to change the law and said they could source silver from anywhere in the world to keep the Silver Eagle program going. So I did a pretty long article, pretty detailed, pretty fact only, not too much opinion in there. And I cited, I think, 5 sources. So anybody in the metals group that wants to push back on me can all they want. They're welcome to their opinion, but the facts are facts. I cite them all. And so we did have silver as a strategic metal at one time. Not anymore. Critical metal does not equal strategic metal. Although you can play the semantics game. But anyway, so thanks for bringing that out. And I think you made an excellent point that I think the silver move is just getting started. I mean, it's been behind gold, as we all know. Now seeing 40, people are getting excited. They have a right to get excited. But I'm really looking forward to that 50 mark and see what happens. And we really only been over 50 for very, very short amounts of time. We get a month close over 50, we are into a new ball game, a new paradigm. And people that own it, that are long-term strong hands, probably aren't going to sell it at 50. Now they might lighten up some. I don't know. I don't know people's thinking. But what I do know is that once that occurs, and I believe it will, then what happens? Well, the holders, the strong hands will hold because they think, wow, how high is it going to go? It's going to get 100. That's what they believe. Or 75 or whatever they believe. And that means there's not a lot in the float. The strong hands are holding hard, holding strong. So new buyers like the industrial side that has to have it to maintain production of whatever they're making, solar panels or silver shot or silver liquids or silver mesh or whatever it is, they've got to buy it or they're out of business.
Silver isn't just an investment, it's an industrial necessity. From solar panels to electronics, its demand is irreplaceable. Historically, the U.S. even classified silver as a strategic reserve, releasing it into circulation through programs like the American Silver Eagle. Today, with inventories tight and central banks stockpiling, silver may once again be seen as strategically vital. A close above $50 per ounce on a monthly or quarterly basis would mark a new era. With strong holders unwilling to sell and industrial users forced to buy, supply squeezes could accelerate. This may be just the beginning of silver's renaissance.
So, and then I think the algorithms will kick in because they'll see there's very little upside resistance and very strong hands holding it. So any buying will move it higher. So they'll want to get in early and sell to their compadres that get in later, or maybe a short-term trade, but nonetheless going from 50 to 55 when you're leveraged to the max, that $5 move when you're highly leveraged can be lots of fiat. So
Yeah.
I'm thinking, yeah. So I'll go give it back to you. You can show us the chart.
Yeah, no, I'll let you finish this thought, but I just had an interesting insight here that I wanted to share really quick. So, yes, we looked at the monthly chart. So let's go ahead and look at the monthly chart. And what you'll notice is, so this line represents the $50 mark. We have never closed above this line within a monthly candlestick. But what's more interesting is that if you look at the 3-month candlestick, if we close out, if we don't go a penny higher or a penny lower from where we're at today, this will be a quarterly close. This will be a record-breaking quarterly close. So,
And that's important. Yeah. Sorry, I don't go ahead and finish. Sorry.
Yeah, go ahead. I'm done.
Well, that's important because people don't understand how markets work. I mean, that sounds rather maybe arrogant. I don't mean it to sound that way. But to get the idea that if I got Microsoft and I've got, I got 100 shares and it's at whatever price, I don't follow Microsoft. But they think that every share that exists could be sold at that price. And that's not true. Because even though it closed at X price on that day and they got 100 shares, they could probably easily off their shares at that price. But if you have a lot of selling pressure, it will push the price down. So these weekly and monthly closes really tell you more about support than a line on a chart does. That's why I like candlesticks so much, because they give you kind of a factor of not only the technical, but the fundamental case, I'll say, because how many strong hands, even as though it's based on a futures price, I get that. But it also does set the physical market. I mean, when you get the spot market, it's based on what the futures closed at on that day. That's the reality of it. Sometimes you have to pay a high premium, sometimes not so much. But regardless, the point being is that when you get a weekly close, a monthly close at an all high, and it's all in green, you see over to the left as you show it's in red. You show the line you produced where you got that, I forget the name of the candle, but it's got the little red and the long stick where it means it's extremely weak. It's petering out. It can't go any higher versus what you're showing with the line where it's just one strong green candle after another strong green candle, a little bit of consolidation.